Hi guys, good morning and welcome to Money Control. You're watching Opening Bell with me, Nandita Khemka. Well, it's a Wednesday morning and the cues are fairly mixed. With the flip-flop on tariffs, by Trump, he in fact threatened to double steel tariffs on Canada to 50% and then backtracked. So yes, Wall Street had a lot to digest really and had another, down day, so to say, with the S&P 500 in fact briefly slipping into the correction zone, 10% off its all-time closing highs. And of course did enter that correction zone briefly, but yes, it was a down day, another down day, so to say, for Wall Street. But Asian markets are looking fairly mixed this morning. The Nikkei, last time I checked, was trading marginally in the green. The GIFT Nifty, however, was hinting at a mildly lower start for our markets, given the fact that we made a very smart recovery from the day's low yesterday. Whether or not we managed to build on that recovery, that's the key thing to watch out for today. 22,500 back on the charts. Can we defend that, or are we going to give in to the tariff induced global storm today? Because yesterday we weathered the storm pretty well, although we opened with a gap down. But of course today, let's see how things really pan out at 9:15 a.m. Lots of stocks in focus, particularly Airtel and even Jio. They have signed a pact with Elon Musk's SpaceX to bring Starlink's fast internet connectivity to India. So these stocks will be in focus. Lots of other stocks will also be in focus. We'll try and touch upon them, and of course your stock related queries will be taken up, so do send them in on our live feed on YouTube. We'll try and get them addressed by our experts. But before we move any further, quickly take a look at the top headlines at this hour. Wall Street continues to slide. The Dow drops more than 450 points, while the S&P 500 is near about that correction territory as investors grapple with Trump tariff fears. All eyes on the consumer price inflation report due later today, which will provide key insights ahead of the Fed's interest rate decision next week. Asian markets trade mixed amid recession fears in the US. The GIFT Nifty is indicating a mildly lower start for our markets. Crude oil prices edge up on a weak US dollar, but gains were capped on fears of economic slowdown and tariff uncertainty. Gold prices also firm on safe haven demand. IndusInd Bank CEO terms the accounting lapse a one-off and says there are no hidden skeletons in the cupboard. The management pledges to turn in a profit in the fourth quarter. Stock plummeted 27% in yesterday's session. CPI data for the month of February is due at 4 p.m. along with the industrial output data for January. Retail inflation may drop below 4% against 4.3% in January. All right then, let's take a look at the cues for trade. Market of course did see buying at lower levels, ended near about the day's high, in fact very close to that 22,500 mark. We did reverse from the support level of 22,300. Financials were relatively underperforming, tracking of course the sell-off that we saw in shares of IndusInd Bank, Axis Bank, HDFC Bank were some of the other drags on the bank Nifty. ICICI Bank, however, managed to buck the trend amid weakness in banking shares. Of course, IndusInd Bank saw its worst drop on record, of course due to the accounting discrepancy in its derivative portfolio. 20,000 crore worth of market cap erased yesterday. In fact, its market cap slipped below that of Yes Bank. OMCs, however, were seeing good traction yesterday on the back of a drop in crude prices, sub $69 per barrel level. That's where the crude is at. So tailwind for OMCs, so to say, and they were completely reacting to that in trade yesterday. The put call ratio on the Nifty jumped to 1.09 vis-a-vis 0.9 in the previous session. IndusInd Bank, of course, has been added to F&O ban. SAIL is another counter that will be in F&O ban, a new entrant rather in the F&O ban list. BSC, Manappuram Finance and Hindustan Copper are already in the futures and options ban. In terms of fund flows, FIIs were net sellers to the tune of 2,800 crore rupees in the cash markets. DIIs continue to buy, and they bought shares worth 2,000 crore rupees in the cash market. But without any delay, let me bring on board our guest for today, Rajesh Palviya of Axis Securities. Rajesh, great to have you on the show. It's been a roller coaster of sorts. Yesterday we saw 22,300 levels being tested. We made a very smart recovery back near 22,500. What does it really look like? Are we going to build on that recovery, or do you think it could be slightly on the lower side? How are you approaching the market today?
Good morning, Nandita. So I believe that, yes, we may see again another bullish day as the previous day recovery is giving us confidence that, at the lower level, buyers are, trying to buy stocks where, oversold trajectory is already there. And Nifty managed to hold its major put concentration area of 22,300, 400 level on a closing basis. So I think if we continues to trade above 22,400, there is a possibility that, again, Nifty may attempt to move higher to its major supply zone of 22,650 to 22,700. That's the major supply zone at this juncture for Nifty on the near-term perspective. Until the Nifty not crosses about 22,700, we may see Nifty to remain in range of 22,350 to 22,700 for some more couple of days, and either side breakout will decide the major direction from here onwards. But looking at the broader market recovery in the mid cap, small cap, as well as the sectors where we have already witnessed a oversold trajectory, they have shown a good recovery in the last couple of days. So that gives us some confidence that maybe Nifty may attempt to give breakout about 22 650 or 700 zone, and if at all this happens, then possible rally can extend to 23,000 level also. But it will take time as global cues are not stable. Again, volatility is there in the global market. So same impact we are going to have in our market also. So markets are going to be remain in a volatile zone, but stock specific action one can focus. A lot of stocks have shown breakout on the near term chart. But again, for Bank Nifty, it's still struggling to cross 48,000 level. That's the major supply zone at this juncture for Bank Nifty on the spot. If at all Bank Nifty able to sustain above 48,000 level, then some recovery we may see in Bank Nifty also, and possible up move towards 48,200 to 300 we can see in the near term perspective. So major supply zone is placed at 48,300, and on the downside 47,600 is the major support zone for near term perspective on the Bank Nifty.
Okay, that's about the bank Nifty. But what about IndusInd Bank? Stock has halved on a one-year basis. Yesterday, it saw its worst fall on record, 27% cut yesterday. Spate of bad news. But what would you be doing with the stock now? A fresh breakdown, of course, but how much in lower can it go?
So very intense selling pressure in the previous day because of news flow. I think we may see further more downside as stock is already in the ban period now for derivative side, and we have already seen huge open interest built up on the short side for IndusInd Bank. So I think if it remains below to 690 700 zone, I think further more downside we could see towards 600 to 570 kind of zone in the IndusInd Bank. So I think one should avoid at this juncture as supply pressure is still there in the stock. So I think let the stock to settle down at certain level, then again one should review it. But at this juncture, avoid at this stock. We may see further more downside in the stock.
Okay, expect further downside on IndusInd Bank from current levels. But another stock that will be in focus will be Bharti Airtel. It has announced an agreement with Elon Musk's SpaceX to bring Starlink's high-speed internet service to its customers in India. In fact, Jio has also inked an agreement with SpaceX rather for the same. The partnership, of course, with Airtel will explore offering Starlink equipment in Airtel's retail stores, Starlink services via Airtel to business customers, and provide connectivity in rural areas as well. However, Bharti, Airtel's, in fact, the near-term benefits from this deal are likely to be limited. Analysts are saying that because Starlink is yet to receive its license in India. Analysts also say that the satellite broadband will be complementary to terrestrial services and not disruptive. Now, JP Morgan has come out with an overweight rating on Airtel with the price target of 1970. It said that pricing for this service will be the key, as it is likely to be positioned as a premium service. Now, in ASEAN markets, Starlink plans are priced at 100 to 180% premium to fixed broadband plans. In fact, Citi has also come out with a buy rating on Bharti Airtel with a price target of 1920. It said that this tie-up is likely to result in 3 positive implications despite commercial terms being unknown. Looking at Bharti, the stock has done well, at a time when the index has corrected quite a bit. Bharti has in fact managed to give positive returns on a YTD basis. In the last 5 sessions as well, Airtel has seen good traction. Your thoughts on how much upside to Airtel from here?
I think
actually, Rajesh, we'll come to you on that. Markets, Rajesh, markets have opened up. Just want to see what the indices are doing. At the first tick, in fact, the Nifty has opened on a positive note, 22,550. So, we are building on the recovery that we saw yesterday. It's a 200-point uptick on the Sensex as well. The mid-cap index outperforming. Yesterday, it was outperforming, and today as well at the open. It is outperforming 0.5% gains on the Nifty mid-cap index. The Bank Nifty has managed to edge back into the green above that 48,000 level as we speak. And for now, at the start, the breath is looking fairly positive, fairly strong, so to say. 5:2. That's the NSE advanced decline ratio. But let's see what the other sectors are really doing at the current juncture, and which is the sector that is in fact taking the lead as of now. See, the auto pack is trading in the green. It has been under pressure, but metals as a pocket also doing well, 0.5% gains coming in there. Most of the sectors in fact are trading in the green, barring the IT pack. There is a Morgan Stanley report which has raised some concerns, and IT of course has been one pocket that has seen consistent sell-off in the last few sessions, and today as well continues to feel the pressure, 0.6% lower on the IT pack. Let's see which are the top gainers at the current juncture when it comes to the index. Bharti Airtel, we were just talking about it, and we will take Rajesh's view also on this stock. It's up 2.5% at the current juncture, above that 1700 level. Tata Motors, there was an analyst day, positive commentary coming in from the management, and brokerages have also come out with their notes. We'll touch upon that. Tata Motors, the second top gainer. HDFC Bank has staged a good comeback today. Power Grid also was among the laggards, but has managed to edge back into the green. Sun Pharma was a winner yesterday, and today as well we are seeing gains extending there. Reliance Industries up almost 1%. Remember, I mentioned Jio has also inked a pact with Elon Musk's SpaceX to bring Starlink services to India. So Reliance also buzzing. NTPC, Bajaj Finserv are the other gainers. On the flip side, IndusInd Bank, once again the top Nifty laggard, of another 5% cut on IndusInd Bank. So I think the stock has lost somewhere around 35% or so in the matter of 3 sessions. That's the kind of sell-off that has come on IndusInd Bank. Infosys, there is a downgrade from Morgan Stanley. So yes, that stock also under pressure. Wipro, TCS, HCL Tech, all the other IT stocks also under pressure. You have Hindustan Unilever, Nestle, all some of these FMCG names also under pressure. Rajesh, coming to you, we were talking about Airtel, top Nifty gainer right now. Your thoughts?
So stock is in positive trajectory. Stock is comfortably holding about 20-day, 50-day moving average. After this news, again, stock has opened in the positive territory. The immediate supply zone, which is the previous swing high of Feb 2025, that is around 1710 zone. So I think that level may act as a immediate supply zone for the stock. If at all stock crosses above 1710 level, I think then rally can extend further, and possible target towards 1760 to 1770 we may see in the near term perspective. So I think those who are already in the trade on the long side can hold their position with stop loss of 1655.
Okay, that's the view on Bharti Airtel. But what do you do with the technology stocks? This pocket has been under pressure of late. In fact, just a couple of days ago, we saw CLSA upgrading Infosys, but today we have a Morgan Stanley report wherein they have downgraded Infosys to equal weight, and the target price has been cut to 1740 from 2,150 rupees per share. Morgan Stanley has pointed out that shifting macroeconomic environment and technology evolution have increased the risks for some of these IT names. Revenue growth and valuation multiples are also facing downside risks. Today, Infosys, in fact, all the other IT stocks are once again under pressure. Any preference when it comes to IT names in the large cap basket, Infosys versus TCS, which one do you like? And anything that's catching your attention from the mid cap pack, the likes of Coforge, Persistent?
Nandita, I think the most of the large cap IT stocks are now slipped below to 200-day moving average. That clearly shows that still the street is not confident about the IT for coming quarters, and I think we may see further more pressure as the IT index itself is in the negative zone and broken all its important moving averages, be it Infosys, Wipro, Tech Mahindra, TCS, all these stocks are now trading below to 200-day moving average. So I think we may see further more, down move in most of the large cap IT stocks. Only HCL Tech is trying to hold, some support. It's getting some support buying action at lower level, but still, we believe that we may see further more cut in most of the large cap IT stocks. So I think at this juncture we will avoid all these large cap IT stocks to buy. But on the mid cap IT, yes, some buying action we have witnessed in some of the mid cap IT stocks like Coforge is looking attractive. If we look at the weekly chart, the stock is almost trading near to its upsloping channel support area. So I think if it continues to remain above 70, 500, 74.50 zone, I think some support buying or some pullback action we may see in Coforge, and possible up move towards 7,800 to 7,900 we may see in the near term perspective. So very few pocket in the mid cap IT are trying to give some bit of recovery, but most of the stocks are still struggling to give any kind of pullback. So at this juncture, try to avoid IT stocks as global news flows are not supportive for IT stocks at this juncture, and we may see further more down move in the near term as well as in the short term perspective.
Okay, steer clear of large cap IT at the current juncture. Global news flow not very supportive, and we are of course seeing continued pressure on IT stocks as well. But Tata Motors, that's another stock that's in focus. It is among the top Nifty gainers today, but the stock is very close to its 52-week lows. The news flow, Tata Motors had an analyst meet and they maintained their fourth quarter JLR guidance. They've also noted that there are challenges in Europe, but they aren't as much as the company had anticipated. A slew of brokerages have come out with their reports on Tata Motors, but notable is CLSA's report, wherein they have said that Tata Motors is a high conviction outperform, target price at 930 rupees per share, and they've taken note of the fact that JLR is confident of achieving its FY25 targets. Volume growth is expected in Europe and US, and JLR as of now is trading below normative multiples as well. But after the kind of correction that this particular stock has seen, would you say that the risk reward is looking attractive at the current juncture, and is it the right time to get in, because brokerages have set out targets of 930 or thereabouts, and the stock is somewhere around 650 or so?
So stock is in oversold trajectory. Some recovery we have already witnessed in last couple of week. But again, in this recovery, stock is now approaching towards its 20-day moving average. Looking at the near-term structure, I think if it's sustainable 640, 635 zone for some couple of days, then I think this pullback can extend further. Possibly stock may attempt to move higher towards 680 to 690 zone. That's the major supply zone for the stock. So those who are already bought at lower level can try to book profit around 680, 690 zone.
Okay, that's about Tata Motors, can buy around 680, 690 zone. But let's shift focus to viewer queries then. A lot of them trickling in, would like to get them addressed. Pooja Khanna has a query on Adani Power, wants to know if it's a good buy at current levels, and her time horizon is 1 year. Adani Power, if you look at the stock, it has corrected somewhere around 2.5% on a YTD basis, and it's pretty much better if you look at what some of the other mid-cap stocks have, mid-cap and stocks have done in the last 3 months or so. So given the fact that it has, kind of done fairly okay in the last 5 sessions as well, would you advise a buy here? It's at 514 or thereabouts. Still quite, they have quite a lot of ground to cover if the stock really were to make a dash at that 52-week high once again.
So we have witnessed a significant correction in this stock, but again, stock has taken the support from its important support area of around 470, 465 zone. It's a multiple support zone for the stock. And we have witnessed, a breakout of falling trend line on the weekly chart. So that gives us some, sign of reversal in the stock. Stock is now trading above to 20-day, 50-day moving average. So I think if it continues to trade above 500 zone, I think there is a possibility that stock may attempt to move further higher towards 540, 550 zone. That's the near-term target where stock can move. So if you want to buy stock, keep your stop loss at around 500. Upside target is 540, 550.
Okay, 540, 550, that's the kind of target you can work with on Adani Power. I want to take up a query on CDSL coming in from Shweta Naidu. She's bought it at 1220, wants to know if she should add more or continue to hold the stock. Of course, the stock has slipped below her buy price. CDSL and some of the other capital market stocks have seen quite a bit of a drubbing, on a YTD basis. At least this particular stock has shaved off almost 40%. Should she average out, or would you say that cut your positions on every bounce? How should she navigate?
So most of the capital market related stocks have corrected significantly in last couple of week, and again CDSL is one of that stock. Looking at the near term, short term structure, stock is now trading near to its important and crucial support area of 1090, 1085 zone, which is very important and crucial for this stock in this correction. If at all stock slips below to 1080 zone, I think furthermore down move can extend, and then possible down move can extend towards 1040, even 1020 zone. Uh, but looking at the weekly chart, we believe that stock may attempt to hold this level, and some pullback action we can see in this stock. But at this juncture, I would not advise to average out this stock, because whole capital market related the basket is under supply pressure. Let this supply pressure to settle down at certain level, then one should review for again to whether to average it or not, because still trend is on the negative side. 1080 is the important level to watch on the near term perspective. If it's break, then you may get opportunity to buy at further lower level towards 1020, 1040 zone also. On the higher side, 1160 is the immediate supply zone. If it's crossed that level, then some recovery we may see. But I think looking at the structure, it's tough to cross around 1160 zone. So maybe wait for some more, clarity on the chart, then average out.
Okay, wait for more clarity before averaging out. Shweta, that's the advice coming in from Rajesh. Hope that helps you. Another query on SW Solar from Debu K wants to know if it's a good time to invest. The stock has, of course, shaved off as much as 65 to 70% on a 6-month basis. The stock has been under continued selling pressure. Today, of course, trading with mild gains of 0.5% or thereabouts, but it's within kissing distance of its 52-week lows. Is now the good time? Do you think the intense selling pressure is out of the way? Is it already in the oversold zone? Can we expect some bit of a reversal from here? Good time to buy?
Though stock is in oversold trajectory, but there is no sign of reversal at this juncture. Stock has broken its previous swing low of October 2023. So I think if it's sustained below to 256 level for next couple of weeks, I think furthermore supply pressure we may see in this counter. So 256 is the critical hurdle on the higher side. Until the stock not crosses that level, trend is likely to exhibit on the bearish side. On the downside, maybe stock can slip further towards 208 to 200 level. So at this juncture, I would say to avoid, don't buy at this juncture, as still there is no signal of reversal at this juncture on the SW Solar.
Okay, no signal of any reversal there on the charts of an SW Solar, but want to quickly squeeze in two more queries then, one on Bharti Hexacom coming in from Naveen. Now, this stock in fact was witnessing good traction the last couple of sessions, but today it has come under some bit of a profit taking. What are your thoughts here on the charts of a Bharti Hexacom?
So overall, it's the chart structure is stable. Those who wants to buy for little longer period, they can buy and accumulate this stock in decline. On the downside, the major support zone is placed at around 1360, 1350 zone. Till stock is holding above this level, I think trend is likely to exhibit on the bullish side. On the higher side, the major supply zone is placed at around 1460, 1470 zone. If at all stock crosses that level, then I think we may see resumption of uptrend, and then possible up move can extend to 1550, even 1580 zone also. So buy on dips would be strategy. 1340 should be your stop loss. So try to buy in the dips, not at current market price.
Okay, buy on dips, that's the call on a Bharti Hexacom. Hope that answers your query. Last query then, coming in on a Kolte Patil from Satya CK. This stock has been on solid ground. Last 5 sessions, a 16% up move. Today as well, trading mildly positive, mild positive uptick there. But do you think it warrants a buy at the current juncture? Because it's still some time away from its 52-week highs, coming off its 52-week lows. Is it a good time to ride this momentum?
So stock has witnessed a very sharp recovery from its oversold trajectory, and now stock is comfortably holding about 20-day, 50-day moving average. Looking at the near-term, short-term structure, the immediate supply zone is placed at around 330 zone. If at all stock crosses about 330, I think we may see extension of this up move towards the 350, 370 zone also. So those who are already bought at lower level can hold the position, as looking at the near term, short term structure, there is a positivity on the chart. So keep your stop loss around 305. Maybe possibly we may see a upward momentum towards 340, 350 in the near term to short term perspective.
Okay, that's about Kolte Patil. Hope that answers your query. But before I let you go, Rajesh, recommendations for our viewers?
Kotak Bank is looking promising. Even Bank Nifty is also showing some strength today, and managed to hold above 48,000 level. So I think could be banking stocks may exhibit some bullish momentum. So Kotak Bank is looking promising. Keep stop loss of 1930. Upside target we may see towards 2000 level. CSC is also showing some bit of recovery from the lower level. I think this stock can also move higher towards 145 to 146. Keep your stop loss around 137 to buy this stock. On the short side, Dr. Reddy is looking weak, and I think we may see furthermore down move in Dr. Reddy, as stock is continuously making lower top, lower bottom formation. I think here we may see further more cut. So one can short Dr. Reddy future for downside target of 1070, 1060. Keep your stop loss around 1125.
Those are the recommendations coming in from Rajesh. With that, Rajesh, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. Always a pleasure, and I look forward to interacting again next week.
Thank you.
Thanks a lot. On that note, taking a look at the market, we have slipped into the red, given up the opening gains. In fact, trading largely flattish, but with a negative bias now. 22,470, that's where we are at, and the Sensex is holding on to that 74,000 mark as of now, down 50 points or thereabouts. But the mid cap index, broad end of the markets, are holding on to the positive zone. In fact, the advanced decline ratio is still tilted in favor of gainers as we speak. Let's see whether they manage to outperform today as well. The Bank Nifty holding on 0.5% gains despite another day of downtake when it comes to the IndusInd Bank shares. But on that note, let me bring on board our big market voice for today. Joining me is Sandeep Bagla, CEO of Trust Mutual Fund. Sandeep, lovely to have you on the show. There are, tariff related news flow to digest, but there are quite a few tailwinds for the Indian markets as well. Crude prices coming off, foreign investors are in sell mode, but the pace of the sell off has kind of slowed down a bit since the start of the month. So here on, we managed to do pretty well in the last 2-3 sessions despite the uncertainty over tariffs. What are your thoughts as to how we are poised right now? What should the strategy be? So this bout of sell-off is something new, for investors, the post-COVID investors, so to say. How should they navigate this storm?
Hi, good morning. Thank you for having me on the show. See, I think it's a time to retrospect. So markets are clearly repricing their expectations. Earlier, markets were extremely optimistic on growth, on future prospects of Indian companies, of global growth. Markets were extremely optimistic and the pricing was also optimistic. Now growth is slowing down and there are uncertainties building up on every possible quarter. The government is clearly not looking to spend more, which was one of the engines of growth. The Indian consumption is sort of slowing down, and the wealth effect is also tapering off, which was due to equity market valuations. Investment cycle, the private investments are yet to take off, and I think given the threats on the tariff part and on neighboring countries trying to dump their goods on us, I think private expenditure on the capital side will take some time to go up. And if you look at net exports, there's nothing to really look forward to given the uncertainties. So it's a time to be patient. I think markets are in the middle of repricing themselves from extreme optimism to realism. Can the markets go down? Yes, if the markets start in factoring in pessimism, then markets can go down further. So we must understand that the markets are repricing themselves. So all we can do is wait and be observant and curb our enthusiasm, set realistic goals, and be prepared for whatever the market does.
What would be the realistic return expectations for this year, according to you, Sandeep?
See, the returns in equity markets tend to be fairly lumpy. So we have seen spectacular returns in the last 3-4 years. So it is, I would say that we should have very, very low expectations. It could be zero. If we are lucky, it will be zero because we are already down a fair amount in the first 2-3 months. And if we are not so lucky, then it will be lower. But it's a great time to invest with a longer term structural story in India remaining quite intact. And the pace of recovery or the pace of growth will slow down from time to time. But the drivers which are driving the structural story are very much intact. We have the demographic dividend, we have a thriving democracy, and we are building efficiencies, and we are digitizing. So I think there's absolutely no let up in terms of the things that is happening at the ground level. They are slowing down. Things do slow down, and they will pick up. So I think it's a very interactive process, and I think the only thing in our control is manage our expectations of returns. That's all we can do.
Sure. Of course, we need to manage our expectations. But, I want to get in your thoughts on a couple of issues then, especially with respect to the banking space. We all saw what happened with IndusInd Bank. The stock has nearly halved over the past year, hit by a trifecta of bad news. First it was the CFO resignation, uncertainty around the CEO's extension, now the derivative misallocation issue. Now, mutual funds with exposure have also taken a big hit when it comes to IndusInd Bank, right? So, my question is, has the stock already been fully derated post this sharp sell-off, or is there more downside risk going forward? Do you see more, skeletons tumbling out of closet when it comes to IndusInd Bank?
You see, we are not allowed and we do not want to speak about individual cases because we do not have proper information. I started my career in NBFC, which was
Hmm.
promoted by a very large group, and I was part of the treasury, and I did have a part, little inside view. And in financial companies, banks, NBFCs, the perception matters a lot. And the management tries to make sure that the perception does not change because all your lenders believe and lend to you on your balance sheet. Now, when that perception is shaken, one does not know the repercussions of that. So I think in financial markets and financial companies, it is very, very important that you maintain the perception and you do the right things. So I think we as investors, we tend to gravitate towards companies where the perceptions are very strong and the growth is visible. So I think for the
Hmm.
overall sector, I don't see it as a major challenge.
Okay, from the for the overall sector, not a major challenge. It is a very company specific issue. But let's talk about another pocket that is in focus this morning. That's the telecom pact. Both Airtel and Jio have signed pact with Elon Musk, SpaceX to bring Starlink's high speed internet to India. Of course, this will open another revenue stream for these companies, but that will take some time. But telecom stocks like Airtel, of course, have done well, in this bout of sell-off. Your thoughts on the entire telecom space, and now how will the landscape change after this deal?
See, I think it will take a lot of time. So I think it is, it's a good development that we are getting access to new technologies for our company's customers. How things eventually set, what are the, terms of trade, what are the revenue sharing, what is the revenue potential, what are the regulations that need to be, approvals that need to be taken, the security measures that need to be safeguarded against. So there is a lot of ifs and buts. So the timing will be very crucial. I think it will take a long time. So it's not something to get very excited about. It's not right now. It's not Nothing is going to change in the immediate future. But it's a good development.
About metals, this is one pocket that has done well in the last couple of weeks. This sector, of course, has outperformed, and dollar has cooled off, and that's one of the factors that has led to this rally, right? And there could be safeguard duties in place as well. So, of course, this pocket is tends to be rather volatile. But for the short term, is it a good play now that dollar has cooled off?
There are too many moving parts right now, and metals tend to be extremely cyclical. So, as fund managers, as investment managers who are looking for more predictable outcomes, typically we tend to avoid the highly cyclical, uh, sectors and companies. Uh, it could be a good play.
Hmm.
It could peter out. There are too many moving parts in terms of currencies. So we tend to, have very little exposure in highly cyclical industries like metals.
Okay. Sure. What about cement? This has been highlighted as a strong investment due to local demand and limited import competition. Do you think cement within the industrials pocket, warrant a look at the current juncture?
See, cement to my mind is also a commodity and it can be cyclical. So at a time when we are suggesting that growth might
Hmm.
taper off and there could be period of lesser activity due to, overall uncertainties in local and global markets, one should not increase allocation beyond the index levels.
Sure. So, what are you doing in this, in this period of volatility? Have you also recalibrated or recalibrated portfolios? Which are the pockets that you are looking at? Because fund managers have been pointing out that from a long-term perspective, it's a good time to look at certain pockets. Where is it that you are finding valuation comfort now?
No, we are finding valuation comfort in some of the large cap names, typically the large banks. I don't think that the credit quality of these banks are going to deteriorate. Uh, these banks will continue to grow. They have built a lot of strengths. and inner resilience. And I think the economy is fairly resilient and will eventually, maybe go through a period of consolidation and recover. And I think the banks are in a very good position to benefit from that. So the more stable names, the more predictable earnings. So I think
Okay.
market is moving from, optimism to realism, from perception to reality, from expectations to cash flows. So we are also sort of calibrating our portfolios towards that. And wherever, there is more surety of earnings and cash flows, we are gravitating towards those companies now.
Have your views on IT changed now that there are concerns over slowdown in the US? In fact, the Morgan Stanley report on IT has also pointed out that shifting macroeconomic environment and technology evolutions have increased risks. In fact, revenue growth may face downside risks according to the global brokerage. Would you concur with that view?
See, the IT will obviously slow down if there is economic uncertainty and large companies do not allocate capital towards IT. But I think IT is a more stable business. IT will keep growing. I think there is no choice that there are emerging technologies and people need to spend on IT. So I think IT will be a more stable sector. There is a lot of hype on AI related spending, and I think that is going to be a very turbulent area because the use case scenarios might take some time to materialize. There could be significant gaps between the enthusiasm that we have towards AI and the actual productivity gains that may accrue to businesses. I think there could be a significant gap there. So there is a case for disappointment or more reality to set in towards AI-led ventures. But I think if you look at the pure IT business, I think it's fairly stable. It may not be very glamorous, but it is very, very dependable.
Sure, it's dependable, but the growth is expected to be in single digits, right? I mean, you can't expect double-digit growth from IT companies. I mean, that's the general view. Would you still be comfortable with that?
Yeah, I think you are paying lower multiples also. And I think we are in a situation where we have to curb our enthusiasm and lower our expectations. And redefine the kind of investments that you're going to take, whether you're going to be in extremely high growth expected companies at high valuations or more predictable things. So I think in these environments, these companies will do better.
Sure. You mentioned or you alluded to the consumption slowdown, but we had a favorable budget where tax cuts were announced. Do you expect consumption, to improve here on in that light? Would you look at some of the pockets in the consumption space? If yes, which ones would they be?
We are looking at consumption space also, and the budget was at the margin, more favorably inclined towards consumption. Whether that is enough or not, only time will tell. And, I will bring you again to that point that, we will have to let time take its course. We should not be in a hurry. These things take time. So, the consumer will get the tax benefit, then he will decide or she will decide whether to invest, whether to save, where to spend. So there are lots of slips between the cup and the lip. So let's wait for some time and let's see the real data to emerge. We our minds can race ahead of reality, and we have to control that.
Sure. Sure. So the best strategy, according to you, should it be like, stay on the sidelines for now till things become a little more clearer? Is that the kind of strategy one should adopt now?
I think so. I think one should consolidate. One should keep making systematic investments. One should prepare for the longer term. I think the T20 is over. I think it's time to play the test cricket. So, you have to play, you cannot try to hit every ball for a six. You have to take some singles, or even better, you have to just stay on the crease. I think staying on the crease is very important right now because you have 5 days to play.
Sure, stay on the crease. Yeah, that's good advice coming in. With that, Sandeep, would like to thank you for taking out time and joining in this morning and sharing your perspective with us. Always a pleasure, and I look forward for more interactions in the future as well.
Thank you so much. Have a great day.
Thank you. Thanks. Well, on that note, we are oscillating between gains and losses. We are back in the positive zone for the Nifty. In fact, we are clutching on to that 22,500 mark as we speak. The mid-cap index as of now outperforming, and the breadth is also looking fairly positive. It is tilted in favor of gainers, almost 2:1. That's the NSE advanced decline ratio for now. In fact, I want to point out IndusInd Bank has reversed course. It was down 5% at the open, and now it's the top Nifty gainer, up 4.5% as we speak. So there is some bit of buying that has emerged after the drubbing that the stock has seen in the last two sessions, yesterday in particular. So yes, IndusInd Bank, top Nifty gainer, followed by Tata Motors. There has been positive brokerage notes after that analyst meet, wherein they have retained their FY25 guidance for Jaguar Land Rover. So yes, leaving you then for now. I'll see you at 3:30 p.m. At the close, but nothing really to complain about. We are just about looking to build on that recovery that we saw yesterday. Let's hope we stick to the positive zone and end the day on a positive note as well. But with that, completely timed out on this edition of Opening Bell. Thanks a lot for tuning in from the entire team. Stay tuned to Money Control for all your other news and updates, and have a great day.